Welcome to Thoughts on Investing. Today we are diving into Roblox. Now, if you've been following the headlines, you're hearing all this noise, all this screaming about a new AI threat that could supposedly make the whole platform obsolete. But what if you ignore that? What if you look at the multi-year stock chart? Well, it might be telling a completely different and frankly, a much bigger story. So let's get into it.
All right, and just a quick reminder before we really jump in, this explainer is purely for educational purposes, okay? It is not financial advice. Markets can be incredibly unpredictable, so please, you have to do your own research. Okay, so let's start with the big conflict happening right now in the market. I like to call it the noise. And really, it's this classic battle between some pretty incredible growth numbers and some very real fear. First up, let's talk fundamentals, because honestly, they are incredibly strong. We're talking about almost $5 billion in annual revenue, and get this, 144 million daily active users. I mean, that's staggering. That user base is growing somewhere between 60 and 70% year over year. And what's really interesting to me is that the adult user segment, that's growing over 50% every year. So by pretty much any measure, this platform is just firing on all cylinders. And that brings us to the big question, right? If your user base is exploding and revenue is scaling this fast, where in the world is all this market anxiety coming from? What are people so worried about?
Well, the fear really boils down to just one thing: AI. Specifically, there's this project from Google called Genie, and it can generate playable games just from simple text prompts. Now, the market heard that and, it panicked. The thinking was, this makes Roblox totally obsolete. But that misses the crucial nuance here. See, AI lowers the barrier to create a game, for sure, but it can't just magically replicate the massive global economy, the community, and the network effects that Roblox has spent years building. The real story might actually be that these AI tools become a huge tailwind, empowering creators inside the Roblox ecosystem, not replacing it from the outside.
So, you've got this really intense debate just raging back and forth. But here's a thought. What if all this short-term noise about AI is making everyone miss the real story? The one that's been quietly unfolding in the background for years now. And that brings us to the signal. We're going to zoom out now and look past all the daily drama. We're going to look at the multi-year story being told on the Roblox stock chart itself. This is where things get interesting.
Here it is. This is the Roblox weekly chart. And that's important. Each one of these little bars represents one full week of trading. So we're filtering out all that day-to-day noise. You can think of this chart as a map of investor psychology, one that stretches back for years. So let's just trace the history here for a second. You can see that initial IPO hype back in 2021, right? The stock just ran aggressively all the way up toward $140. And then, what followed was a long, pretty painful correction that lasted all the way into 2024. The hype just completely faded and sentiment totally collapsed.
But look closely at what was happening during that entire downturn. Something else was going on. A massive structure was being built. This huge rounding bottom is what technical analysts call an accumulation base, or more simply, a cup. Now that word accumulation is key here. It suggests that while the public was selling in a panic, long-term investors may have been quietly buying, building up their positions for years.
So what exactly is this pattern we're talking about? It's called a cup and handle. The cup is that big U shape we just saw, which suggests the stock has found a long-term bottom. The handle is a smaller, shorter pullback that can happen right after. When you see these two things together, it's widely considered a bullish signal for a potential big move higher.
Okay, so we've identified this massive structure sitting right there on the chart. So let's talk about what this could actually mean for the future and what a potential game plan might look like based on this very clear signal.
Now, let's zoom in on what's happening right now. After rallying up from the bottom of that cup, the stock is pulling back a bit. And look where it's pulling back to, a critical support zone right around $60 a share. And let me tell you, this level is not random at all. It is incredibly important.
So why is $60? Why is it so significant? Well, think about it. First, it was the original IPO launch price. Second, it's acted as a really strong floor of support in the past. Third, it's a major psychological round number. And for the traders out there, it even aligns with key technical levels they watch. You put all that together, and what it means is this is a zone where buyers have historically shown up in force.
So how could this whole thing play out? Well, here's one potential scenario to think about. First, the price could find its footing and stabilize right around this $60 support zone. It might even dip toward 50, which is another key structural level.
Second, it could then rotate back up towards those old highs near 140, and that would form the handle of our pattern. And third, a confirmed breakout above those highs would finally complete this massive multi-year formation. There's a saying in trading, and as one analyst put it, huge bases create huge moves. And this base is massive. The sheer amount of time, we're talking years, and the energy the market has spent building the structure, well, it suggests that if it finally resolves to the upside, the move that follows could be just as significant.
So let's just bring it all together. On the one hand, you have the noise, right? All the short-term fear about AI competition, the constant debates about profitability. But on the other hand, you have the signal, a massive, multi-year accumulation base that's forming right on top of major historical support.
And that really leaves us with the final question you have to ask yourself. With such a clear difference between the short-term narrative and the long-term technical picture, is it possible the market is focused on the completely wrong story? Hey, if you enjoyed this breakdown and you got some value from learning how to separate the signal from the noise, please don't forget to hit that like button and subscribe for more deep dives. Thanks so much for watching.